Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. There's been some big news out of China lately, and today we'll dive deeper into the discussion when I welcome in Gordon Chang. Mr. Chang is one of the foremost experts on the Chinese economy and has written a book titled The Coming Collapse of China. He'll tell us why he believes an epic collapse is imminent and what it all means for the Western financial world and why he believes there is what he calls a Chinese floor on the gold price. Don't miss an incredibly enlightening interview with Gordon Chang coming up after this week's market update. Precious metals markets are pulling back for a second straight week on follow-through technical selling. Gold ran into resistance at the $1,300 level last week, and prices have since retreated by a little over $30. As of this Friday recording, gold trades at $1,269 an ounce, down 1.6% on the week. Gold's more volatile relative silver looks lower by 2.7% this week to trade at $17.06 per ounce. Platinum is off 3.4% to trade $1,045, while palladium shows a weekly loss of 3.1%, with prices currently coming in at $592 an ounce as of this Friday morning recording. Metals markets are correcting after being propelled upward by an explosion in investment demand in the first 4 months of the year. On Thursday, the World Gold Council released its latest quarterly gold demand report. According to the report, global gold demand surged by 21% in Q1. Total gold demand came in at 1,290 tons, the second biggest figure ever for a quarter, this despite weak industrial demand and falling jewelry sales. Jewelry is normally the biggest driver of consumer demand for gold, but this year investment buying is almost single-handedly driving the gold market. According to the World Gold Council, gold investment demand skyrocketed in the first quarter by a record 122%. Exchange-traded products, such as the iShares Gold ETF, received so many investment inflows so quickly that at one point they had to suspend the creation of new shares. Sales of gold coins are also going through the roof. The U.S. Mint reported that sales of gold eagles in April 2016 ran at double the pace of April 2015. Demand for silver eagles is also coming in brisk, with the mint selling more than 4 million of the coins in April and 20 million year-to-date. Last year, the mint sold a record 47 million silver ounces worth of eagles, and that's with the mint reportedly selling out of the coins and being unable to provide dealers with adequate supply of its products on numerous occasions. We appear headed for another new record this year, unless the mint puts some artificial brakes on silver eagle demand through continued rationing. Silver eagles always carry a slight premium to privately minted rounds. Sometimes the premiums expand when eagles are in relatively high demand and short supply. It's not necessarily a bad move to pay a little extra for silver or gold eagles. You'll be able to get back some of the extra premium when you sell, but you generally don't want to buy American eagles when premiums are elevated, since they could contract back to normal levels by the time you want to sell or need to sell. Platinum eagles are hard to come by, as the mint stopped regularly producing them in 2009, although there has been talk that the mint will release some 2016 dated platinum eagles at some point this year. In the meantime, investors seeking diversification into platinum and palladium bullion should look instead to Canadian maple leafs or 1-ounce bullion bars. Now is a good time to take a look at the platinum group metals, as they have gotten cheap versus gold and silver over the past couple of years. The platinum to gold ratio has turned up slightly in favor of platinum in 2016, but platinum remains in bargain territory historically speaking. It will continue to be a relative bargain as long as platinum commands a lower price per ounce than gold. Currently, gold commands a $220 premium over platinum. A great way to get started in platinum and palladium, or precious metals in general, is through the new PAMP multigram portfolio. Money Metals now offers this unique product, which contains small gold, silver, platinum, and palladium bullion bars in one handy package. Each pack contains 4 bars of each metal in the barter-ready 2.5 gram size. The package is designed to be separated into 16 individual sections, each containing a bar marked with the PAMP name, serial number, weight, and purity. These Swiss-made bars are second to none when it comes to quality and security features. They carry PAMP's proprietary Veriscan technology to assure holders that the bars are genuine and untampered with. The microscopic topography of each bar allows PAMP to assign an identity as unique as a human fingerprint. Bars can be scanned again later for verification. PAMP Swiss bars are also famous for their beautiful designs. The front of each gold, silver, platinum, and palladium bars features Lady Fortuna, a Roman goddess representing fortune and luck. To add a little flair to your holding, consider investing in any of the PAMP Swiss bars now available from Money Metals Exchange thanks to a new partnership. To view all of the new PAMP products we now carry, and for up-to-the-minute pricing on these or other items, check out our website at moneymetals.com or give us a call at 1-800-800-1865. And remember, no matter what you choose to buy, shipping and insurance are now free on any $1,000 plus order. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to welcome in author, lawyer, television pundit, and Forbes columnist Gordon Chang. Gordon is a frequent guest on Fox News, CNBC, and CNN, and is one of the foremost experts on the Chinese economy and its geopolitics, and has written a book on the subject called The Coming Collapse of China. Gordon, it's a real honor to have you on with us today. Thank you very much for taking the time, and welcome.
Well, thank you, and it's a real honor to be on your podcast.
Well, before we dig into some specifics here, Gordon, China's economy is now the second largest in the world. They've been reporting GDP growth at 7 to 10% per year for decades, and we've all heard stories about their booming economy, but few Americans have been there and probably don't really know what's going on. The Chinese government is notorious for managing statistics and controlling information, so it can be difficult for U.S. investors to get the real story. That's why we're very excited to get your insights today. You've spent time in China, you are of Chinese descent, and you've been studying their economy for decades, so you have a unique perspective on what is really happening there. So to start out here, talk about the current state of the Chinese economy as you see it, and where it might be headed. And as people listening have probably already gathered based on the title of your book you wrote, you aren't all that optimistic about what's going to happen there. Tell us about that as we set the stage here.
The official National Bureau of Statistics says that the Chinese economy grew 6.7% in the first quarter of this year, 6.9% in 2015. I think that those numbers are overstatements. So, for instance, in Q1, they might have been growing 3 or 4%, but maybe even less than that. In 2015, it was a tragic story because you start looking at some of the indicators. You see the contraction of the important manufacturing sector. You see consumption growing a little bit, but not that much. And still the most reliable indicator of Chinese economic activity is the consumption of electricity. And in 2015, electricity consumption grew, but only by 0.5%. The country was in deflation in 2015 with nominal GDP at 6.4% and real at 6.9%. That's really difficult to reconcile with an economy growing in the higher single digits. So I think China is in a problem right now because essentially Chinese leaders no longer have the ability to create growth. This is an economy that's trying to trend down, and eventually it will start to contract.
The Chinese have made some large trade deals with nations such as Russia and Brazil to buy oil and gas and make payments in yuan rather than U.S. dollars. In addition, China is growing its reserves of both gold and silver. Now, you've told me off air that you don't think a currency war is something China should even consider engaging in based on all of their economic issues, but you have to wonder if they're trying to position the yuan as an alternative to the dollar nonetheless. Heaven knows there may be an opportunity opportunity there. The U.S. dollar looks less and less like a bastion of strength. And Kenneth Austin, an economist at our own Treasury Department, wrote a 2014 op-ed in the New York Times declaring that the burden of the dollar's reserve currency status is one we can no longer afford to bear. Maybe a currency war won't be necessary, and officials here will willingly step aside. What are your thoughts? Should we expect a major push by China to supplant the dollar with the yuan anytime soon? And maybe it will be a failed attempt, but is that something they're positioning themselves for, Gordon?
Well, clearly, Michael, the Chinese want the renminbi to be the world's reserve currency. They'd like to shove the dollar aside. The problem, though, is that it is a weak currency right now. Donald Trump might be right that they're currency manipulators, but they're not manipulating the currency down to gain an export advantage. What we have seen, especially since from August of last year, is that they are supporting their currency. And so this is a problem for China because the last thing that they should be trying to do right now is to internationalize the renminbi. And the reason is when they internationalize it, they start to lose control over it. And that's exactly the wrong strategy when you have an economy in distress. They have put a lot of money, and they've lost actually a lot of money out of their reserves, much more than I think that they're willing to admit. So this is the wrong thing for them to do, at least at this particular time.
It's often discussed how the Chinese are culturally more forward-looking. They plan decades ahead, not just a few months or years. If that is true, one might think that they would have an advantage and avoid some of the traps Western governments have fallen into, but they seem to be making many of the same mistakes. Markets are anything but free. Last summer, officials attempted to prevent a collapse of their stock markets by threatening to arrest anyone selling shares, the antithesis of free market conditions there. They've accrued massive debts, and they have an activist central bank printing, monetizing debt, etc. Are Chinese officials really better at strategic planning and longer-term thinking, Gordon?
Yeah, I actually don't think so. And especially what we saw starting in the second week of July when they started to introduce their support measures for the equity markets. And then, of course, the still inexplicable devaluation of the renminbi starting August 11th. Chinese technocrats showed themselves to be less than fearsome and less than competent. So I think that we sort of attribute to them mythic qualities which they don't really deserve. Eventually they will be able, I think, to stabilize their economy, and they've been trying to do that right now. But as they do that, they incur a lot of debt. They're still experiencing large capital outflows. So right now, although it looks like that they were able to at least staunch the problems, they have some challenges I don't think that they can meet.
Certainly, the information that comes out from the Chinese government is very controlled. I think now I've heard just even recently that if you speak ill of the government's provided statistics, that they'll try to send you to prison or try to prosecute you in some way. I mean, this is just sort of the opposite of what a free market looks like. And what are your thoughts on that? I know this is something that's been going on for a long time, but they don't appreciate dissenters, do they, Gordon?
No, they certainly don't. I mean, the Wall Street Journal report that you referred to, where they're trying to infuse a little positive energy into analysts. As we all know, it's beginning July of last year, they criminalized many forms of trading. They did a lot to prohibit institutions from selling. They just at this point, that's sort of like the last refuge of a technocrat, where they're trying to browbeat market participants and analysts. So I think that that's an indication that the end is quite near, because they just run out of solutions. Monetary policy just hasn't worked. Fiscal stimulus is adding to their debt woes. They do all of these things, and you still have the large capital outflows, perhaps as much as $1 trillion last year, according to Bloomberg. So I think these are desperate technocrats and desperate leaders who at this point don't know what to do and are just playing for time. And as they play for time, they make matters worse, because we saw that extraordinary increase in credit in March. It had a very little effect on the economy. It's a dead panda bounce. And now I don't think that they know what to do except to try to imprison people who don't say nice things about China's economic potential.
I'm curious, how do the Chinese view the American political system as a whole and also the Obama administration? And how do you think they view Hillary and Trump, since it appears that one of them will be succeeding Obama later this year? What's the general mood about American politics in China?
Well, there are a lot of Chinese, so maybe there's no general view. Of course, Beijing, the Communist Party, is extremely negative about all things American. And so you're not going to hear nice things about the American political system from an authoritarian one like China's. Chinese people, though, are very interested. They have means of information. They can climb over what's called the Great Firewall. There is a lot of discussion all the time about what goes on in the American political system. Right now, as you point out, people are talking about both Secretary Clinton and Donald Trump, and it seems to be pretty evenly divided about what they think in terms of who they favor to be the next American president. There's a lot that's going on there, and Donald Trump, as you'd expect, has a lot of detractors in China, but he also has a lot of supporters. The thing that I just take away, and this is a general thing, is that my wife and I went to my dad's hometown in early 2008 because we wanted to know about what people thought on the Olympics. But people didn't want to talk to us about that, which they derided as the government's games, which really surprised me. What they wanted to talk about was who was John McCain, who was Barack Obama, and how, and this is really surprising, how did the concept of balance of powers work in the American Constitution? So people there are really focused in on the United States as an alternate model for China. And although the Communist Party will never want that, nonetheless, I think the Chinese people certainly want more say in their lives, and they're willing to learn from others, which I think is a very important sign of a vibrant society.
The Chinese government does seem to maybe nudge their citizens to purchase gold and silver as a way to protect themselves. Does that resonate with the citizenry there? Or are they accumulating precious metals at a personal level just because there's an affinity for it, or are they just going along with what the government's sort of telling them to do? What can you say there?
Yeah, I think the Chinese people are acquiring precious metals, but especially gold. But it's not because they're nudged by the government. I think they're doing it because there's concern about their currency, about their economy, and also about the signs of discord in the political system. So you have people buying gold. This is an easy way of capital flight, in effect, because if people can't set up a tax haven company in Panama, for instance, just to take an example, the one way to protect your assets is to buy hard metals. And so, therefore, people buy gold. Now, of course, the Chinese have an affinity for gold, have had for centuries. But now I think the demands are actually much higher. There's a lot of gold buying by China. Some of it must be from the central bank. But I think a lot of it is by individuals who are concerned about the trajectory of their economy and, indeed, of their country.
Are we to believe the reports, Gordon, about how much gold the People's Bank of China is accumulating? And if not, do you think they're underreporting it or overreporting it? What do you think about China's gold hoard and what they've been telling the world about those figures?
Yeah, for a very long time, the People's Bank of China was telling us that there was no change in China's gold position. And then about a year or so ago, they announced a big increase all in 1 month. So obviously their reporting is inaccurate and unreliable. I don't know exactly, but my sense is that they are underreporting their acquisition of gold. I can't point you to anything, but it's just a sense of where Chinese the government policy is going. And I don't know what purpose that is for. People talk about eventually a gold-backed renminbi. I don't think that they're thinking about that. But nonetheless, when gold dipped in price, they saw a buying opportunity, and so therefore they did stock up on gold. And we can expect them to do that at other opportunities when gold declines. So there's going to be essentially a Chinese floor to gold. largely because of central government buying. But also, as I mentioned, just Chinese individuals will rush in to buy the precious yellow metal when they see that it's cheap.
The Shanghai Gold and Silver Exchange was introduced last month. It provides an alternative to the COMEX and other Western exchanges, which many believe are massively over-leveraged and highly controlled by the banks, some of whom have recently admitted to rigging prices. But investors need to be careful assuming the Shanghai Exchange won't be subject to problems of its own. What do you think? What do you think the ramifications of the new exchange in Shanghai might be for the metals markets, and what do you think was behind the decision for the Chinese government to launch this competing exchange?
I think the decision behind the launch is what you talked about before, and that is a general attempt to internationalize the renminbi and also to increase China's influence in markets generally. As I mentioned, I'm not so sure how long that they'll be able to continue with this initiative, largely because of severe problems in their own economy. But, as you say, they are long-term thinkers, and so that's what they're trying to do. As I mentioned, this is probably the wrong time for them to do that. And so, therefore, they're increasing volatility in their own currency and in their own markets. So this really is maybe a good move strategically, but tactically, this couldn't be the worst time to do it. Couldn't be a worse time to do it than now.
Well, as we begin to close here, Gordon, what should the key takeaway here be? Because I know you're expecting not only a collapse of the Chinese economy and their current way of life, but an epic collapse. China is now a major player in the global economy. But if the bubble bursts like you expect and in such an incredibly disruptive way like you expect, what are some of the ramifications of that happening? And more importantly, for those of us listening today, how might that collapse affect those of us in the Western world as well as the global financial markets?
We saw, for instance, last August where essentially unimportant news out of the Chinese economy, which was news out of a private survey of the manufacturing sector, how that erased something like $2.1 trillion in value off the Dow within 6 trading days. So you can imagine what a big failure in China is going to look like as it rolls through the global financial system and the global economy. China actually is less important to the world than most people think, but nonetheless, with an image of it as being so large, then of course it is going to bring down most everything else with it. I think the important thing is to understand China's role in that economy so that we will be prepared when it occurs. We know that the Chinese are, for instance, accumulating debt at least 4 times faster than nominal GDP, probably a lot faster than that. That means that that's completely unsustainable. There will be a crisis. We don't know when that crisis will occur, but we also know at some point China will not be what it is today. And longer term, that means countries like the United States will be stronger because money will flow into the U.S. when there is crisis in Asia, and that crisis is indeed coming. So long term, one has to be optimistic about the United States.
How about the future of the Chinese Communist Party throughout all of this? I know I think I've seen you say somewhere where you're expecting just mass riots and so forth as things unfold there in China. What do you think the ramifications are there?
Yeah, I don't think the Communist Party will survive the economic crisis in China. Largely because for about 35 years, the primary basis of its legitimacy has been the continual delivery of prosperity. And without prosperity, the Communist Party is going to have a hard time navigating that. Right now, Chinese technocrats don't seem to be doing a terribly good job. We see fighting between Xi Jinping, the General Secretary of the Communist Party, in other words, China's ruler, and Li Keqiang, who is the premier, who's supposed to be the economic czar. This is, I think, an early indication of what things will look like as the economy tends to trend down, as it has to. Because although the Chinese technocrats can postpone the application of the laws of economics, they have not been able to repeal them. And because of that, we know that there's got to be some adjustment. That adjustment will be large because the imbalances in China are large. And because of that, the Communist Party, I believe, will not survive the coming crisis.
It's certainly going to be interesting to watch this play out. China gets a lot of attention throughout the world, as you mentioned, and if we do see an implosion of that economy, it's got to be there's going to be a lot of shockwaves, I think, throughout the rest of the world, and perhaps the United States and other Western nations benefit from it. But things are looking like they're going to be quite a bit different in the future once China does really fall off that cliff, like you're suggesting. Well, Gordon, it's been a truly fascinating conversation, and I really enjoyed it. We've been talking a lot about what's been going on with China of late, and it's great to have had a chance to speak to an expert like yourself about these matters. And we wish you the continued success with the book, and would love to have you back on in the future as all this unfolds. Thank you again, and hope you have a great weekend.
Thank you so much, Michael.
Well, that will do it for this week. Thanks again to Gordon Chang, author of the book, The Coming Collapse of China. Be sure to check that out. And check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.